Back with the Treasury Forum after a little break through the travel. Good to see you, Peter. How are you doing?
Good to see you, King. Yeah, doing
Great to have you
well.
on. Next month. Yeah, very nice to catch up. And we've had a couple of wild weeks in many areas of the market. Obviously, Bitcoin has been quite volatile, but mainly what I wanted to catch up with you on is stretch and strategy. Right, so much has happened in the last few weeks, and maybe to recap a little bit, we saw some. Well, we had a announcement a couple of weeks ago where strategy essentially sold 32 Bitcoin. And that raised a whole debate about, oh, I thought they were never going to sell. And there was a company saying, well, we never said that. And that started. And also at the same time, obviously, they repaid the 1.5 billion of the 3 billion convert at 92 cents. So that's in itself is somewhat accretive. But that really made the cash reserve be reduced to 880 million or something, quite a bit. And that sort of spooked the market. And then what we saw then is a gradual decline of, well, gradually and then suddenly decline of the STRC share price, if you will, right? Always sort of pegged around par, went down to low 90s, high 80s, and we saw it as low as the as mid 70s. And obviously, a big question is where did that come from? What did the company do? We'll talk about a few things that happened since, but maybe starting with that in itself, right? It'd be great to get your thoughts on what do you think happened? Why do you think Stretch started trading like that? And maybe we could take it from there. We'd love to get your initial view.
Yeah, so again, for those who are not familiar with Stretch, Stretch is the flagship product for strategy. Now, this is not their only financial product. They, as you briefly mentioned, had converts, or still have a bunch of converts. They moved away from converts to issuing a different group of financial instruments using something called perpetual preferreds. These are infinite duration. They're not quite fixed income, not quite equity. They kind of sit in between. But out of all of those products, they found product market fit with STRC, or what they call Stretch. Stretch has been very successful. We found product market fit earlier this year, where the whole idea is that they pay a pretty handsome dividend. They recently raised that dividend to 12% that they pay out twice a month, so 50 basis points each month. And if it goes above 100, they start ATMing that to then buy Bitcoin with that. And so the whole idea is this speculative attack on fiat, right? You pay 12, you get paid 12%, while then they take up the risk to issue that perpetual dividend, and the excess will then accrete back to the commons. Now, as some of you guys know, MSTR has always advertised itself as amplified Bitcoin. Now, obviously, in a downturn, there's now been amplified to the downside. Now, the issue with this is, of course, these are very new instruments. I think Stretch just had its 1 year anniversary. But I think a learning lesson from this is that it's been advertised to be a low volatility, high yielding asset. Now, the problem with that is that that is good in theory, and it had acted like that. But because of how much liquidity it attracts, I'm sure now the hedge funds are having some fun with it. So they've pushed it down quite a bit to what you mentioned earlier, which is all the way down to 75. Now, since then, I think this is just in the last couple of days, they have issued and revised quite a bit of their policy, and I guess we can go into that as well.
Yeah, that's great. Great summary of the background of the instrument. And obviously, it's been very successful, right? As you mentioned, because of this sort of liquidity being very high, it basically raised more than 10 billion within a year, which is unheard of for a new instrument. So the biggest IPO of 2025, and then enormous amount of ATM issuance since, really at or above par. And I think that's where you hit on the first sort of roadblock that strategy hit, and probably one of the first big ones in the last few years anyway, right? Because they've been excellent in all their capital markets execution and really hitting it right many times in a row. And is that where the instrument was somewhat presented as a well, if you take a step back, why is Stretch a really attractive instrument for strategy to issue? Because it doesn't have maturity, right? It gives enormous flexibility for the company, like a convert, as you said, if you're out of the money, go to bull and bear markets. At the moment, we're in a lower market than when these converts were issued. So they're really straight bonds, 0% straight bonds that have to be repaid. And there's a bit of maturity wall in the next few years. So with stretch, that gets, or with stretch type instruments, you avoid that maturity. And then the second flexibility that the company has, it doesn't have to pay the coupon. It can stop the dividend, and at which point it's not accumulating. So as a holder, you will get that payment at some point, but the company can indefinitely actually postpone it. So those are clear from company side fantastic, because I've been in distress for a long time, as you know, and it's always for a company that trigger, right, an event. There is a covenant breach, there's a repayment, the liquidity running out. None of these can happen with Stretch or with all the other pref instruments. There's no maturity, and if you can't pay the coupon, you don't have to. So that's sort of the outset, and that's why it's an interesting instrument. But then, on the other hand, in the way that obviously the product becomes successful and was talked about many times over by the company, but also by lots of people in the market, is that it is as you said, low vol instrument, but also an instrument that in a way you can buy if you have a bit less risk at your disposal. You want to be somewhat exposed to Bitcoin, but not have the full volatility, so lower vol, and have a stable income generating instrument. But that in itself then has some conflict with the original purpose of the instrument, which is that it's very flexible. And that's why we sort of, I think, hit in the last few weeks, where the market started getting more concerned that an instrument that on the tin is very stable and income generating has the potential of not being paid, and that led to the downfall. And then, as you see many times, it becomes sort of self-fulfilling in many ways. I think there was I guess, an unfortunate interaction between Stretch trading down and also Strategy as a stock trading down, also Bitcoin trading down. So it was really a triage where it was a bit of a perfect storm. MNF coming in of Strategy, so it couldn't defend itself that strongly with equity ATMs, and Stretch itself obviously being more difficult. And then the big question became, what is the company going to do, right? And will it suspend the dividend? That was certainly the talk. And if you see the price at the low points, for sure, the market was pricing that in. Is it going to keep it the same, sort of say, look, we're just going to hold and see how this stabilizes, or increase it? And maybe you want to give a bit of an insight on what happened next, because obviously there was a big announcement earlier this week.
Yeah, so as I briefly alluded to, they're now paying 12%, but just before this, it was 11.5%. So they did increase their dividends, which they said that they would, because they're trying to effectively try to have a soft peg around 100. But that was not the major news. The major news is the fact that they created something called the Bitcoin monetization program, which allows them to effectively sell Bitcoin and to either buy back some of these preferreds, mostly basis. This makes the most amount of sense in several folds. So first of all, they get to sell the high basis Bitcoin. So if it's above their average, then they get a tax benefit if they sell that. But that's not the most important thing. The most important thing is that if you get to buy back these perpetual preferreds below 100, that's accretive, right? And so if when you issued it, it was at $100 perpetual obligation. But now if you get to buy that below that, then by nature, that's accretive. And on top of that, if you retire some of these and never issue them again, or maybe issue them in a better capital markets environment, then concurrently, you're also lowering the annual dividend obligation as well. So it makes a lot of mathematical sense. Now, obviously, I think this is a reason why Saylor sold just 32 Bitcoin a few weeks ago, is to effectively signal to the market that they have now changed their messaging and their strategy to allow them to sell Bitcoin. And I think while the headline news was not great, right, because people was trolling Saylor saying, hey, you're the never sell your Bitcoin guy, he had to pivot with the times, and the math works out that way. And then I would just want to add that this is not just a requirement or a mathematical sense from MSTR, but rather this is a credit rating type strategy as well. right? Right now, the credit rating agencies, I think S&P rated the preferreds at like a B minus rating. And so one of the things that they want is increase the cash dividend, sorry, the cash reserves, which they also did as well. But also they want to see the flexibility in being able to pay, sell some Bitcoin to effectively show that it is liquid. So yeah, I think in all fronts, this made a lot of mathematical sense. It may not be great for headline news, but I think whenever the bull market does return, people are just going to forget about this.
Yeah, yeah, 100%. No, and zooming in a second on the sale, right? So as mentioned, Strategy sold 32 Bitcoin a couple of weeks ago. The market fell all over it. X was all over it, and actually Bitcoin came down. And at the time, the company said, we wanted to inoculate the market, and sort of show that we're real about this. We'll do this in a very opportunistic manner, as you mentioned. And now, what I find interesting is that obviously in its Monday announcement, as you said, the Bitcoin monetization company is much larger, right? It's I think 15,000 Bitcoin or something. Anyway, a much larger number, and the market actually didn't react, right? It was sort of like all considered positive. Bitcoin, it's been flattish since then, a bit volatile, but around the same level. So I think there's a very good way of concluding that it was basically a master move. This inoculation really worked, right? It spooked the market a little bit. Market used it, 32 Bitcoin, and then 15,000, no one really cared anymore. So I think that is sort of a very interesting element of this
Yes.
whole release. Would you
And
agree
here's
with
the
that?
thing. I agree with that. But here's the thing, right? Those who really, really follow MSTR, like you and I do, knew that they were signaling this before they even sold the 32 Bitcoin. I'm especially alluding to the fact that their latest earnings call, they mentioned it explicitly. So again, because people don't follow a certain stock to the level of granularity that you and I do, doesn't mean that it wouldn't cause a lot of sensational news. So that's kind of, I think, a learning lesson that I think everybody in the space is learning as well, is that now you're separating the theoretical, right, with the actual market reaction. And a big learning lesson, I think, that both MSTR and I see Strive doing, I think Matt Cole, the CEO from Strive, just sent out a tweet in the last 24 hours saying that effectively we're not really going to try to broadcast our strategy that openly and transparently and on such a regular cadence, because in a bear market that's just going to box you in. And I think that's right. I think having a tempered approach to saying, hey, this is roughly our strategy, our true north type of metric is still increasing our Bitcoin holdings and our Bitcoin per share. And by the way, just a note on that, Grain of Salt, who's part of True North, came up with just the inverse of Bitcoin per share, is how many shares of the common does it take to acquire one Bitcoin? I think that's a much better metric, because you'll see that it's on a, maybe not so much on a week to week basis, because that can fluctuate, but say for instance on a quarter, but definitely on a year to year basis, you see that the number of the common shares to acquire one Bitcoin goes down over time. And I think that's a much more clearer message to the market to say, hey, in the short fluctuations, especially during bear market, it can be tricky. But in the long run, we are adding value to the common shareholders by actually reducing the number of shares it takes to acquire one Bitcoin.
That's interesting. I got to think about it a bit more. I kind of missed that one, but that is of a new Bitcoin, right? So it's purely essentially if your share price is going up because it doesn't link to the existing balance in that math, right? There's no,
Well,
because Bitcoin per share obviously links to the existing balance and how much you increase it.
it's just the inverse, right? It's Bitcoin per share is
Yeah.
for one share of the common MSTR shareholders, for one share of MSTR commons, how many Bitcoin, or in this case Sats, that is. So simply just inverse it. It's how many shares of the commons does it take to acquire one Bitcoin? And you see that slowly going down, which is what you want as a shareholder. You
Yeah.
want more ownership of the rare, scarce asset that is Bitcoin.
Yeah, yeah, there you go. And a second ago, you were mentioning something about the stretch buybacks, right? That's an important point, and I think you and I have both spoken about this on X. It is all about this very, I would say, calculated math in which way strategy can generate the most Bitcoin per share growth, right? What's the most accretive? And certainly with Stretch trading at these levels, well, it's a bit higher now, it's around 86, I guess. It makes a lot of sense for the company to do that. And I think what's interesting in that release from Monday, it's the first time they officially announced it, right? They have a certain cap, they've sort of said, we're going to do that. Do you think the company's actually doing it right now? Because it is an announcement, right? It has traded up since. Could be because they're buying it. I'm very curious. Do you think we'll see on the coming Monday that they would have bought some?
Obviously, I wouldn't know, but I think when you say that I have a bazooka, and if I was an opportunistic fixed income investor who actually cannot legally have exposure to Bitcoin ETFs, this is for the first time a way to express your thoughts in a form that is quite conservative, in my opinion, right? Because let's just, like what we said earlier, last week, Stretch went all the way down to 75 or whatever, 72, 75. Let's just say 75, okay? So we know that Stretch is the flagship product of MSTR and that they will only ATM above 100. So if I was able to buy at 75 and I know that they're trying hell or high waters to push us back up to 100, I get not only now the 12% dividend, but also a potential 25% capital appreciation. So again, from a fixed income investor's perspective, how are you going to express that view in any other way? So this is a phenomenal experiment. I think just like in 2022 for MSTR, where actually at one point their real liabilities where they had debt was greater than the net asset value of their balance sheet. They survived and they obviously learned a lot of lessons from that. This is actually this bear market for is going to be the best marketing tool once they survive this bear market, which already it's healing quite effectively.
Yeah, I totally agree with that. I think that's a great point, right? Because people forget, as we said earlier, this is an instrument that's not even a year old, right? And the company in its current form is 5 years old, 5, 6 years old, right? What it's doing now, we're seeing new instruments, new techniques, everything is new, and it is totally logical that you go through called teething problems and optimizing. And I think again, it was a week ago, things were looking pretty dire actually. If you think about the market perception, and it's I had never any doubt, and neither did you. I think that they were going to do something big on that. I think the big one as well from Monday, the announcement from last Monday was the increased reserve, right? So the company continued to essentially use its ATM, raise about 1.5 billion, and suddenly it has almost 18 months again, right? 17.4 months or something again, and that's really a piece to market. And it tells you this also, all these things also tell you what the market finds important, right? It's also changed a bit over time, but that cash balance is super important, and arguably it's obviously Bitcoin per share dilutive, right? You raise cash, you sell shares, and not even at a huge multiple, actually almost around one MNAV, and you don't buy Bitcoin with that, you keep it in cash. It's actually dilutive for your Bitcoin per share. But hey, if that means that you can, your stretch comes up, the whole cap structure stabilizes, it's worth it, if you will. And that's what happened, right? We've seen a massive rally of the different instruments in the complex. Strategy itself is up above 100 right now. I'm looking here, old 99. It was above 100 briefly. Stretch itself is up. All the bonds are up. So very much a positive. I want to come back to what you said a little while ago, a few things ago about Matt Cole of Strive. Obviously, they've done a couple of very interesting things themselves with daily dividends. They've had some volatility as well in SATA, as you would in this market, because everything becomes one big beta pool. And I think that point is interesting. I had to think about this, right? And as we know, any normal company reports quarterly, sometimes even semi-annually, and that's it. In between, there's not much you can do as an investor and as the market. And for strategy, so used to weekly updates, even live updates on the dashboard, right? And you get this constant fix of information. But in a bear market, it's definitely it can be tricky because as a company, it's almost like you're managing your balance sheet on a weekly basis, which is nearly impossible. So I can definitely see some validity in that argument from Matt Cole to say, look, we're in a bear market, we're going to be a bit more inward focused for some time, and then publishing when we can to make sure we can do the best thing for shareholders, right? That's ultimately what it's
Yes.
about.
Yes.
Yeah.
Yeah, because they realize that if you're telegraphing that, hey, below a certain range, we're going to jack up the dividend, by 25 basis or 50 basis points. I mean, hedge funds are no dummies. They're just going to play around with that volatility all day, every day, right? And as these instruments get more and more liquidity, it's going to draw more and more of these volatility players. But now, I don't know if some hedge funds can do only equities, but others can do all assets under the sun. So it's going to attract more and more volatility hunters. So I actually recommended that instead of mechanically increasing your dividends, just let Bitcoin's recovery do 80 to 90% of the heavy lift, right? Because in my opinion, if you increased, like I said, Stretch increased its dividend obligation from 11.5 to 12%, 50 basis points increase. It's
Hmm.
like that's not going to really do it because the effective yield is already so juicy at, say, for instance, 75, 85, right? Like the effective yield is already juicy. So as you're increasing the annual dividend, while your stock is down, and then now you're stressing that even more, and then now you're also ATMing the commons to do a cash reserves, it becomes very, very dilutive on a temporary basis. I get it. Like, I get it. That's what you need to do because you need a propped up STRC in order to start ATMing that. That is the strategy. But I don't think out of all the moves that they made, I don't think they really needed to increase that 50 basis points. But otherwise, I agreed with almost everything that they have done so far.
Yeah. No, I think it's an interesting point. So well, it's interesting because obviously the market didn't only partially reacted, right? As you say, your point is it's almost like a rounding error, 50 basis points on that number.
Yeah,
It doesn't. It's
yeah.
never going to get back. It was never going to go back to par on that basis, right?
Right.
That's yeah.
I say this. I think increasing your dividend obligation should be taken with a little bit more scrutiny because generally that ought to be a one-way ratchet unless there's massive macro type news where then, the Fed, puts, cuts interest rates. And so naturally you will cut your interest rate. That's a natural reaction. But generally speaking, I think ratcheting up the dividend obligation that mechanically is a liability, and I think that's what Matt Cole, the Stripe CEO, was alluding to, is that we're not going to be that mechanical going forward.
Yeah, I hear you. I hear you. Yeah. And also, you saw this, right? They did this vote about um, SATA not just issuing, doing the ATM at par, but also at different levels, right? Which sort of removes the upside of 100, right? And I thought it was very interesting because it is also very bullish, saying, look, I'm going to issue above par even. That's sort of like, they're not close to that, but it definitely rallied, right? It's back at, I'm just looking at it right now, it's back at 97 and a half, actually.
Well,
So,
we should note to the audience who's not familiar with SATA, which is Strive's equivalent of Stretch, is that a major differentiating factor, other than the fact that they pay 13%, which is 100 basis points above STRCs. That's not the most interesting part. The most interesting part is that they somehow found a way to issue daily dividends, daily as in like each business day. So roughly 250 days out of the year you receive a dividend. So why is that important? Well, it's because they've been observing for Stretch that people will be kind of manipulating the buys around the ex-dividend dates. And so, just after ex-dividend dates, it'll go back down, and then it'll still take a couple of days to go back up. And so every day it goes back like that. It takes to recover to eventually hit par is a day that you cannot ATM it. And so on a daily basis that you reset, they hypothesize, and I believe it's true, that the rate at which it holds closer to par is going to outperform that of Strike.
yeah, yeah, yeah. And it's worked so far. So it's interesting. Yeah, the yield is now definitely inside Stretch. This is probably the first time actually, right? Stretch is always tighter, price tighter on a current yield basis than SATA, and it's not inside because it rallied a lot. So that's very
I just want
interesting.
to add though, the problem though, so every Bitcoin treasury company has its pros and cons, right? Obviously, MSTR has this insurmountable amount of Bitcoin, but then with
Yeah,
that, they had to learn a lot of lessons along the way, right? So as we briefly mentioned before, they're sitting on quite a few $1 billion worth of um, uh, convertible bonds, right? And then on top of that, they have all these other prefers. So from a capital structure perspective, it's quite messy. Like like you have to really learn and like if I was an institutional investor and I had to like map out the risks of this, it'd be quite difficult in my opinion. As opposed to say, for instance, Strive is that yes, they're sitting on 20,000 Bitcoin, which is a drop in the bucket compared to MSTRs, but they have a cleaner balance sheet. But also they have a higher cost of capital, and then also they have one of the deepest Bitcoin Treasury talent pools, which means that the SG&A is quite high, right? And then, I'm also a big fan of MetaPlanet, but there's pros and cons in that as well. So it's like every Bitcoin Treasury company is not made the same, even though the underlying asset is Bitcoin itself. There's still differentiating mechanisms that I think, from a investor relations perspective, these companies can, yeah, hone their messaging a little better. And the reason why I say that is actually not only do I have a traditional finance background and I know Bitcoin quite well, but specifically my most relevant skill set is that I do come from an investor relations background of working at an S&P 500 company. So I understand, from a executive perspective, how to message, but then also can empathize with how the retailer is reacting. And I think a huge reason why you're seeing such a big backlash in these bear times is, of course, one, bear markets are never fun, and so somebody always needs to point to a scapegoat. But more important than that, when it comes to Sailor and MSTR, is the fact that you are effectively a $40 billion oil tanker that is kind of required to change its messaging as they navigate these uncharted waters. So I call it investor whiplash, right? You're a $40 billion oil tanker that is whipping around like a speedboat. And so people are going to be a little bit disoriented. And that's why I think,
Mhm.
if you slow down your cadence of communication with your investors, they're not going to experience that much whiplash going forward.
Very interesting. Very interesting. So would you say that for strategy, it wouldn't be so bad to let loose the weekly updates and move to bi-weekly or monthly even, something like that?
I think I think being unpredictable is an advantage. So unless you have something significant to say, just keep quiet. You already won. Everybody in this space know that you won, and so the more that you uh, are required to change your messaging and for other people to poke holes, the more enemies you make. Whether that comes in the form of shareholders selling your shares, or the shorts amplifying that message to increase volatility to the downside. But that being said, if you're other Bitcoin treasury companies, that may not be your strategy, right? Because attention is the rarest asset these days. It's even rarer than Bitcoin itself. And
Hmm.
so if you are anyone other than MSTR, then you need a different corporate strategy.
Yeah, very interesting. No, what you said earlier, I really agree. I think the beauty is obviously in a lot of these Bitcoin treasuries appear, and obviously we're one, but each will have its own strategy, its own edge, its own business model. And the beauty of that is that investors can pick and choose, right? They can say, look, I like this model, right? I like the MetaPlanet model because it's doing this with its customers, et cetera, or this one. So that's all part of a real growing sector and a whole growing asset class, that there's differentiation, there's a curve, there's all these things that people allows people to trade it and pick their preferences. I think it's all
I,
part
I,
of
I
part of
want,
growing up.
I agree with that. I want to be really particular about Bitcoin treasury companies and its corporate communication strategy. So Bitcoin is internet money, and so inevitably, that first wave of Bitcoin treasury investors is going to be internet centric people, right? And so Twitter, you and I know Twitter is the hub for that. Okay. But also remember that is your first core group of shareholders. And so you really need to appease them one way or another. So one great company that is doing this well, even though they have not stacked that much Bitcoin relative to, say, for instance, a Strive, a Metaplanet, or MSTR, is SmarterWeb, right? They have a very, very loyal core of retail investors who have rode this thing down past 90% down, but they're loyal, right? And not only are they loyal, so that means they're not selling your shares, but every time there's new updates, they're amplifying that message, on behalf of management. And that's because management has really, really invested a great amount of time communicating to the marketplace. So that is a winning strategy, okay? But again, if you don't have attention, you could be like, for instance, not to talk bad because I actually want to say something good about this company is DDC, right? DDC has been consistently stacking throughout this bear market, but they're trading at a 0.3x MNAV, okay? Because they got no retail shareholder base to talk about them, okay? Despite the fact that they actually probably have the best Bitcoin yield all year. So why is that? Well, it's because attention is the currency, right? And if you don't have a good corporate strategy, a good investor relation that can cultivate an investor base and build their trust through a bear market, then you're going to be forgotten about in the bull market.
Yeah, oh, fair enough. And what on Smarter Web, they're still trading at a discount to NAV, right? Do you think
Yes.
then it's the lack of institutional involvement that is causing that, or they need a credit strategy, digital credits to do that? What do you think is next for them to get them back above?
So I think in a bear market, 80, the price of Bitcoin itself needs to do 80 to 90% of the heavy lifting. And during the
Right.
bear market, you're effectively just trying to appease your investor base and say, hey, like we're working, this is what we're trying to deliver. Just believe in us type of attitude. That which is what they're doing. I actually don't think there'll be more than 5 serious digital credit issuers that's backed by Bitcoin. Because one, it takes a considerable stack to do it, because doing one of these things is quite time consuming and also costly, right? You need lawyers, you need, regulators, meetings, blah, 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 blah. Okay. Another thing is that there's simply not that many Bitcoin Treasury talent available, right? Bitcoiners, yeah, there's, quite a few million of us now, right? But the intersection between Bitcoiners who can speak TradFi is extremely small. So small that it can fit in a small conference room that you and I have been to before, right? And so, that's what, like we talk about strategies, right? Strive saw that the rarest commodity of all was talented Bitcoiners who can speak TradFi, and Matt Cole just recruited them all, right? And so I don't know how many other free agents there are that can actively discuss it to. So yeah, that's why it's like I think in a bear market, it's probably the best time to like if there are good talent to like recruit them and like pay them a buttload because in a bull market, like it's they're just gone. Or they'll be priced
Even
out.
harder. Yeah,
Yeah,
yeah, that's always the case. That's one thing we've learned, right? As you go these cycles, actually bear market is the best time in a way to build. So
that's right.
on that note, Peter, really really great to catch up and super interesting insights. Thanks very much for that. I'm sure the last thing is not said about this. We'll keep seeing the sector develop and hopefully being part of that. So great to have you and see you soon again. Thanks again.
Thanks for having me.